Great learners, my name is Mr. Simbi and welcome to today's accounting class. In today's class, we are doing the statement of comprehensive income. And today I have some interesting adjustments for you. So make sure you have a calculator, you need a pen or a pencil. You also need somewhere to write. Okay, I want you to benefit from today's class as we are going to do some interesting adjustments. And the adjustments that we'll be doing are 1, 2, and 3. So we're going to focus firstly on these 3 adjustments. If you have a problem with depreciation, today we're going to address that problem. All right, so let's start off with adjustment number 1. It says, an amount of 11,800 paid for repairs to one of the vehicles was debited to the vehicle's account in error. It is very important now to understand that repairs are an expense. Repairs are an expense, but vehicles are an asset. So we should not debit an asset account with an expense. Rather, an expense should be recorded in the expense account. So what we did of debiting the vehicle's account with repairs of 11,800 is incorrect. So to correct the vehicle's amount, we should come and say 211,800 minus the 11,800. Therefore, our vehicles would remain with 200,000. That is the true cost of our vehicles, 200,000. What then do we do with that 11,800? It is recorded in the statement of comprehensive income under operating expenses, so we record it under repairs. And we have vehicle repairs here, 3,300. So come here, I have my 3,300 here. Then I must add now this 11.8. So I'll come here and say plus 11,800 plus 11,800. That is going to give you now the total amount of repairs, which is 12,100. That becomes the total amount for our repairs for this year. Very important once again. Once repairs are debited to the land and buildings, that's an error. And how we correct it is we subtract that amount from the land and buildings or the vehicles account, because in this case, they were debited to vehicles. You may find that they can be debited to land and buildings or to equipment. Either case, it should be taken from the asset account and should be taken to the repairs account. You should subtract it from that particular account, which is the asset account. In this case, we subtracted it from our vehicles account. So we remain with 200,000 for vehicles, and the 11,800 goes to repairs. 3,300 plus 11.8 gives you 12,100. That is how it's supposed to be done. This is what we have already done. Okay? I'm going to move on to adjustment number 2. Adjustment 2 then reads, depreciation is calculated as follows. Equipment at 10% on cost. Vehicles, 15% on the diminishing balance. A new computer costing 20,000 was purchased on 1 July. This has been properly recorded. Very important. The moment they tell us that this has been properly recorded, okay? We want to see, okay, this is where we're supposed to record our amounts. So we need to calculate depreciation. Let's start with equipment. Our equipment is 100,000. So our equipment is 100,000. However, we are told that a new computer costing 20,000 was purchased on 1 July. So this has been properly recorded. We cannot just come here and say multiply by 10 over 100, multiply by 12 over 12, because a computer costing 20,000 has been added to our equipment. So we can't consider it to be in the business for 12 months. So we need to take it out, and then we now subtract 20,000. So this is a new. So we will now have 80,000. So the 80,000 becomes the old, the one that we had from the beginning is the old. And the 20,000 is what we just got now, which we are told is the new. So we have two pieces here now. We have the old 80. Then we have the new, which is 20,000. Now we can calculate depreciation separately. Let's start with the old. The old is 80,000. Multiply by the depreciation rate, which is 10 over 100. Multiply by 12 over 12. This will give me depreciation amount. Please punch that in your calculator. You will get 8,000. You get 8,000. Let's come to the new one. The new one is for 20,000 and the depreciation rate is 10%. And we bought it on the 1st of July. And the financial year is ending on the 31st of December. So if you count from July to December, that will give you 6 months. The important aspect is that it's the 1st of July. So you must count July as well. You get 6 months, 6 over 12. And this would then give me an amount that is 1,000. So when I come now to my equipment, I now know when I come here, I'll say depreciation. Depreciation under my operating expenses. I'll first start with 8,000, then I'll say plus 1,000. This is the 8,000 and this is the 1,000. So I am now done with my equipment. The next calculation, therefore, has to do with vehicles. Vehicles. And it says vehicles is at 15% on the diminishing balance method. All right? Remember, we have already corrected our vehicles amount. It is no longer 211,800 because they had debited with repairs. So we are now left with 200,000 on our vehicles. Our vehicles, we're left with only 200,000. Then we take our 200,000. We are using the diminishing balance method. Therefore, I must subtract accumulated depreciation on my vehicles. And that is 20,000. So come here and say 200,000 minus 200,000 minus accumulated depreciation, which is 20,000. I will now be left with 180,000. From the 180,000, then I'll say multiply that by the depreciation rate, which is 15 over 100. Multiply this by 12 over 12. I want you to grab a calculator, and I'm going to call the amounts for you. So it's your 180,000. It's a 180,000. Multiply that by 15 over 100. Multiply by 12 over 12. And your depreciation amount, therefore, becomes 27,000. You get 27,000. This is depreciation for your vehicles. So I'll come here and say plus, I'm going to bring it in the line below, 27,000. That is how I get my 27,000 there. All right. Very important that you get that amount. If you close this, then you are now saying your 8,000 plus 1,000 plus the 27,000. That would then give you total amount, which is 36,000. 36,000 becomes your depreciation for the year. Very important, dear learners, that we do it this way. Here is that solution to what we have calculated. Very important that you remember that this 11,000 must be subtracted from this 211,800 before you can calculate depreciation at 15%. That is how you can then get the 27,000. Adjustment number 3 then says, an amount of 1,000 is still outstanding on commission income. If an amount is still outstanding, we come here to other operating income, then we have our commission income. And our commission income that we are given in the list of balances is 32,000. yet we are being told 1,000 is still outstanding. So we come here, we add 1,000 to give us a total of 33,000 commission income. This is what we then end up with. Remember, we add the 1,000 that is still outstanding. That is our accrued income. Very important that we know how to do these adjustments. Dear learners, let us go for an ad break, and I'll see you shortly.